Satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, we're going to talk about inflation. I posted a chart here of a 1960 Porsche Roadster. This is the exact car that I bought. I bought the car in 1966. It was 6 years old, and it only had like 4,000 miles on it. It was owned by a doctor, a retired dentist, an orthodontist, and so I bought the car. Anyway, this is a picture of it. I've shown several different pictures, but the reason why I wanted to show you what do you call the sales price of that car when it was first sold up in Lakeshore Drive at the Porsche dealership there was $2,900. Now I wanted to show you something. I've been looking at this car because I like old cars. I do. I always have. Anyway, I want you to see the license plates, folks. 222. I said, oh my God, is she sending me a message that I should have this car? So I called in to get a price on it. Now the original price was $29.95. And it just had the one top, the rag top. It didn't have a hard top with it or anything like that. It had a four-cylinder, 210 horsepower engine, as I recall. Did not have disc brakes or anything like that. But when I got the bid back from the people that are selling it in California, Canopy, which they do some beautiful cars, folks, $390,000 is what they were asking for that car. So I called up to see if that was the actual price. I thought maybe they misprinted it or something. So I called up and he said, you're too late. It's already been sold. Wow. You talk about inflation? Are you kidding me? Anyway, that's the way it goes. 100 times more than you paid for it in 1960, but that's neither here nor there. Let's talk about the markets, folks. We got some big things going on in the markets. I think it's important that we sort of pay attention to them today. Maybe it means something, maybe it doesn't, but all I want to do is to bring it to your attention. You decide. I'll let you be the deciding factor of what you want to look at here. But if you'll take a look here, oh, I got the wrong one up. Just a minute. Doggone it. Shut the front door and raise the rent. Where is it? Doggone it. Oh, man alive. Boy, oh boy, hold on one second. I've got to get the right one up here. Boy, I'm embarrassed to even bring this up. Hold on. I think this is what I want to look at. Nope, that's not it. Boy, I'm embarrassed, folks. I'll get this up here. What happened to it? Well, I'm going to start out with the weekly. Hold on here just a second here. And as soon as we come back, after I show this one, I'm going to go in and get this chart because it's that important from a technical standpoint. Here is the E-mini S&P, and you'll be able to see it. This is the weekly, but where we are right now is really, really important. And the reason why we're important is because of the next chart that I'm going to get for you, and that's the real daily of the E-mini S&P. So just give me 1 second here. Bill Meridian will be our guest here at the break, so that'll always be some fun to look at. So let me blow this up a little bit, and there's where we want to be. And stop the front door and raise the rent. I got to move this up just a tiny little bit to show you where we are because it's that important. Oh, doggone it. This is son of a gun. Let's get this up here. All right, now hold on to your horses. I got to move this out of the way. Boy, oh boy, what is wrong with this? Doggone it. Here's what I want to show you. Just a second. If you like ABCDs, and most of you do, what we have today is what we call the ABCD. Now here it comes. Boy, holy cow, just a second. Man, technical difficulties, got to love them. Oh, that's not right. Oh dear, now what did I do wrong now? I'm panicking, folks. I don't like technical stuff. There you are. Let's get it up here. Okay. Now, there is the S&P 500 making an ABCD pattern up here, folks, at the magical price of 44.11. Last Friday, or the Friday's high was 44.09. So pay very, very close attention to it today, folks. The high today has been the same as, actually 1 point lower than yesterday. So watch the number of 40.09. 40.09 is the high. 40.11 has been the number that you're waiting to see. That's the ABCD pattern that you're watching, which I think is the most important. Now, let me do one other thing here to show you that I'm having a really difficult time with Discord, because every time I try to change something, I can't. Oh, doggone it! Just a minute here, boys and girls. I gotta get this up here so we can see it. Son of a gun! Not too fun. Okay, now here's the one that I want to show you. This is the one, to me, that is the most important of all. This is a daily chart of the E-mini S&P. Okay, now we're going to come up here. Oh, man. Oh, man. Nope, I can't get it. Son of a gun. Just a second. Folks, I'm really sorry, but I'm having some technical difficulties with my with the charts that I've tried to post here. And if you'll give me 1 second here, I'll try to get this done. This doesn't usually happen to me, but it did. So, all right, I'm going to start from scratch here and see if I can get this chart up correctly. If I can't, I'm just going to bend the ear. This is it. Okay. This is the cash S&P, folks. What we've done here on Friday, and also almost today, this number that we're looking at from Friday is an exact 382 of the high from January 4th. Okay, now you can see you've got a 61% retracement also here. But the main one, the fact is, that is an ABCD pattern. It's taken 3.5 weeks to form, and it's right at the 382. That's why this is so important. That means today is the day the market should start to go down. So that's all I'm saying, and that's I'm going to be sticking to it, but that's what we're looking at here today. Hold on 1 second. Boy, there, I finally figured out. I figured out what I did wrong. I just clicked the wrong button. Sorry, boys and girls. All right, let's get back. Anyway, that's the S&P. Now, if you look at the NASDAQ is even more exciting, because the NASDAQ is only making a 382 off of the August high, nearly exactly. So these are telling you that there's something that is going to be happening very, very shortly. So we'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I have posted a chart here. I get a lot of requests saying, how do you learn how to trade? And, trading is simple, but it's not easy. It takes a lot of hard work to learn to be a trader, because if you learn to be a good trader, you're in an income level of doctors, dentists, and attorneys, and sometimes far, far beyond those. So, and I'm not the sharpest knife in the drawer, but by golly, I've been able to make a living off this business of trading for quite some time. And, it's just, you just got to practice. That's all it is. We're looking at patterns. That's all we're looking at. We know that they repeat because Andrew Lowe's book, the Non-Random Walk Down Wall Street, along with the work of Burton Malkiel, his chaos theory, and then also Benoit Mandelbrot. All of those people and just all the people in the past, Elliott Wave, Gartley, all these guys have shown that these patterns work, but they don't work all the time. And that's the whole key to it, is you got to figure out what you're looking for. Now, if you just look at this chart like this and say, the first thing I try to get when I have a student, the first thing I try to get them to do is to take a blank chart like this, and all I want them to do is to draw in the ABCD patterns. That's all I want them to do. And I'll show you what it looks like when you start to do this. It's not that hard. We'll get this up here so we can see it easily. And there we go. And here we go. This is what it looks like. I mean, this took me maybe 5 minutes to do. Basically, all you have to do is to draw all the lines from the high to the low, the trading ones, not these little tiny ones you can't do, but the tradable one. This is a daily Euro chart, folks. This thing trades $1 trillion a day. So, this is big time money here. So you'll notice here it's in a downtrend, and you can see the ABCD patterns that you see here. You see the big one, A, B, C, D, A, B, C, D, A, B, C, D, all the way down. And then you start to see the patterns on the upside. Now you see a nice 1-3 pattern right here. And all you do is connect all these dots. And what you've got to do is you connect the highs and lows to the prices that you see so that they all connect. And look when you get here. Look at the euro right now. Look how many ratios are coming together here. 1, 2, 3, 4, 5 different ratios. and patterns are coming together here at this Gartley pattern as we speak here in the ratio. That means either today or tomorrow, you're going to see a big move in the euro. It's either going to pop out of here really fast or it's going to back off. Now, my guess is because this is a 382 off of that high, I'm assuming that that's what's going to happen. Now, the last part of this is we look at ratios and we look at the geometric numbers and the ratios of sacred geometry, which are the square roots of 5, 1, 2, 3, 4, and 5, and take those square roots. Those are right from Pythagoras, and that's what you'd want to look at. So if you add those to it, and I'll bring that up here to show you what it looks like. You just come up here, take a quick look, and you'll see there you are. And this is what it looks like. These are all the ratios, and you can see we got so many of them coming here right now. This is going to be something, really, really important in the euro. If, in fact, it is important. It might break out to the upside, or it should break off to the downside. This is the first really significant ABCD pattern that we've had in the last 5 months. So this is either a major bottom down here, or we're getting ready to start to see the market back off again. Now, okay, you do this one time, then repeat it 500 times. And believe me, Sarah has a ream, I'm not kidding, that's 500 charts, a little more than a ream and a half of all those charts, 15-minute, half-hour daily, where she did every single swing and started to match up the pattern. After you've done enough of them, then you'll be able to see, what we're looking at here. And I'll show you a couple of them here in just a second. But by golly, that's what you have to do. Stop and think of it, folks. If you have a child that has to have an appendectomy, do you want the first-year resident that's going to be doing his very first appendectomy to do that on your child? Heck no, man. You want the chief of surgery who's done 10,000 of them is watching a golf match on the TV above him while he's operating. That's what you want. So after you've done these long enough, you're going to see what I call the eureka moment. You look at that and you'll say, oh, eureka. Now look, there's no oscillators on this chart. There's no indicators on this chart. And there never will be, because I just believe that it's the bar chart that counts. If there's more buyers, prices are going up. If there's more sellers, prices are going down. And that's the type of opportunity I'm looking for. Now, just today, for instance, just look at this that we had going on here in a market that was really going crazy to the upside. This was gold earlier in the morning. And all I do is when it makes a new high from the previous day, I want to see what that first retracement is going to be. And as you can see, that first retracement came in right at the 382. And what it did, it made a beautiful A, B, C, D down here. And then, of course, it rallied back up a little bit. But that completed the pattern. A, B, C, D. The risk here was about $3. It made $7. And that's what we're looking at. But the big one, the one that was really interesting because it was on a longer time frame, was in the crude oil. So what we're going to look now on the crude oil, take a quick look up here. By the way, I had some great news today from the TFNN folks. Tommy O'Brien has told me starting tomorrow, if you're a member of the 24/7, you're going to be getting these instantaneously. No waiting, no fooling around, no nothing. This is going to be, I'll be able to put these into a file and boom, you'll get them exactly like I'm seeing them right now. Look at the nice little A, B, C, D right at the top here in the crude oil. Now, let's say you missed it. Comes down, rallies up to a 78% retracement, comes down, rallies up to a 78% retracement. And on this second one, you have the pattern that we know as the 135. You remember that from Bill Longstreet and his father, Roy? 1, 3, 5, boom, one more. There's your 50% retracement of the high. Folks, it dropped $4 a barrel from there. I mean, that's a huge move with a very, very small amount of risk. So that's the kind you're trying to find when you're looking at these patterns. And we're going to be doing more and more. I wanted to show the DAX before we have our good friend Bill Meridian coming on, because this shows a beautiful pattern that failed and what happened. I just wanted to get this up here. This comes from our good friend Alan Smith over in the UK. But look at this beautiful 135 pattern, and look at the explosion right there. That's what could happen in the euro. That it certainly could. And so that's what you have to look for, because when you see that, you flat know you're wrong. And that's why these patterns are good, because when they fail, they're telling you to get out of dodge. Stand away. Don't try to catch a falling knife or try to hope that the top is in. Wait till you see a better pattern, because that pattern flat out failed. It's no good. So you got to remember that. Very, very important to pay attention to that as we look at some of these things here this morning. Now, we're going to take a little break here, and then we'll have Bill Meridian on here at the break. And by the way, I won't be here on Thursday and Friday. I have some personal things that I have to take care of, old age stuff. But anyway, it's no surgery or anything like that. But let's take a break here, and we will be back with our good friend, Bill Meridian.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have as our guest today Bill Meridian of Cycles Research out of Vienna, Austria. Bill, how are you doing?
Hello, Larry.
We're ready, pal. What do you got for us today, buddy? By the way, congratulations on the calls you made 3 weeks ago. You were flat out spot on, especially about the election. You said there was probably going to be a non-event, and that's exactly what happened.
Well, anything that commences on the day of an eclipse works out unexpectedly, and in the weeks before that, everyone was predicting a red wave, so I said there wouldn't be one.
You certainly did, yep.
Very simple. Okay, can I share my screen?
Yes, please, go right ahead. You're in charge.
Okay, can you see let me get this thing out of the way. I presume you can see that.
They will let me know when whether we can see it or not in just a second. I think it should be okay. Al, would you let me know that the chart will pop up, because I don't see it as of yet in the room. So hopefully it'll be up here in just a second. Yep, it's up, ready to go. So go ahead and talk, pal. We're ready.
Okay, this is the outlook as of November 14th. The summary: I think the stock market rally runs through Q4. But the thing I'm concerned about longer term is the average bear runs 30 to 33 months and retraces 38% to 50% of the prior bull market. And we have not done that yet. Mm-hmm. So when this burns out, in January is going to be a key then as to whether the market is going to rally next year or not. Rates, I think, are headed higher, although I do feel that bonds are in a rally right now that will last till November. Oil is moving lower, and as I've mentioned many times before, the real estate cycle is peaking. And I do not think that analysts have figured the decline in real estate prices, which will hurt consumer spending. And I don't think they've lowered their price targets on many stocks, but not their earnings estimates. So I think that's all out in front of us. So bullish short term, and I'm pretty doubtful a bit longer term. So the 10-year cycle, the 1-4 10-year cycle has been the best guide. And for people who haven't seen it yet, I'll very quickly explain that the annual cycle is the annual cycle. We get weakness here, September, October. September is the weakest month of the year. June is the second weakest. And of course, we have, this is based on data from 1885, so you got more than 100 observations.
Wow.
The election year cycle is, of course, the 4-year cycle. Now, as my late friend Ian Notley used to say, it's okay to attribute that to the elections. And they say the Federal Reserve, I was taught at NYU, dresses up the economy to make the incumbent look good. But we had a 4-year cycle before the institution of the Federal Reserve in 1913, and you have it in countries where there's a 4-year election cycle, 6-year election cycle, or no elections whatsoever. So in other words, there's a 4-year cycle. And the decennial cycle was developed by Edgar Lawrence Smith at Ameritrade Bank. That is a cycle that broke down market behavior by years ending in 0, 1, 2, 3, 4, 5. Years ending in 0 have the worst returns. Years ending in 5 had the best returns. Years ending in 7 usually bring crises. And combining the two, Octobers and years ending in 2 have a very high probability of bringing in a good low, which is where we were at last month. So this has been the guide. It worked perfectly well in 2016, wasn't that good until this year. And that is that big blue line up above, that's an addition, a vector addition of the 3 below. That's the overall cycle. And here's that cycle for Q4. And you can see it bottomed around September 30th, October 1st, and the actual bottom was around, I think, October 11th or 13th. Mm-hmm. So off by 2 weeks. It also predicted the rally in June, but I think it was 1 week late. And this is, let me explain what it is. The red is the probability that the market is going higher, and you read that on the right scale. So in other words, there's an over 80% chance of the market being up in August. The blue is the percentage return. So for October, you read over here, that's 4%. The green is the multiplication of red times blue. In other words, it's expected return. The probability that you're going to make money multiplied by the money you're going to make. And there are only 6 years, because what I've done is I've taken all years ending in 2 that have been election years, which is why there were only 6 observations from 1885. So you'll see it predicted a weak June, it predicted a weak September, it predicted this July-August rally, and it predicted a strong October, which we certainly had, and pretty good here November and December, but it turns down again in January. So it's a reflection of the 1-4 10-year cycle, but we're looking at it, we're breaking it down a bit more, and we're looking at it from a different viewpoint. And now here's once this happens, then you look for technical signals. The technical analysis that Larry, myself, and probably a lot of people were brought up with was you wait until something happens. Now, some people like to go to cycles or use Elliott wave or Gann techniques to project out into the future. Once you've done that, you're waiting for a signal. Well, down here, that hit the 3,500 level, which is a major retracement level on a monthly or a weekly chart. And look, it hit it, and intraday, it popped up. I said, that's got to be the low. Then you had a little bit of a rally, a pullback, and now we have a gap up. A gap like that at the beginning of a move is a breakaway gap. If it's in the middle of the move, it's a continuation gap, and if it's at the end, it's an exhaustion gap. So we are confirmed. And in the last 2 days, Friday, Monday, we haven't pulled back and retraced a lot. So I think this rally is very real, and the 1-4 10-year cycle is correct. So now you can see that right here, 3,500. That was a 50% retracement of this rally, and it was a retracement of some other rally. It looks like I don't have it on the screen here. Mm-hmm. But when you hit these retracement levels, if you hit multiple ones, in Joe DiNapoli terminology, you have confluence, you have agreement or confirmation, as technicians would say. So here's the November review. Same analysis that I presented the last time. All months from 1885, this month, November, up 58% of the time. But if it's year ending in 2, it's up 69% of the time. If it's 2 years past an election, it's up 60.3% of the time. If you combine numbers 2 and 3, in both 0 and election years, this is up 67% of the time. And this month has the highest percentage return. So that's the setup for November. Now, next question, which stocks am I going to buy? And this is a new thing I've developed. This process has been applied to the Dow Jones 30. It's been appearing in Forbes. Over the last 33 months, the long stocks have risen by an amount about 60% greater than that of the short sales and 28% over the DJIA. This was conducted only on the Dow 30 stocks. The short sales were net negative over that time period at minus 16%. Well, the longs should outperform the index, and the shorts should underperform the index. So I can now run that. It was initially done, as we start all things, by hand. And my software will now screen through and take the seasonality and the relative strength and combine them. So in other words, we want to know which stocks will be strong in November or December, and are they currently relatively strong? So it's a combination of relative strength and seasonality. So I tested this on the S&P when the tool became available. So from January through September, the longs are up 30.1%, the shorts down 36%, and the S&P is minus 20%. That's how it should work.
Wow. Bill, we got to pay a few bills here, but this is great. Those are great statistics. And we'll be right back with Bill Meridian of Cycle Research, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, speaking with Bill Meridian of Cycles Research. Bill, you want to continue, please?
Yeah, so if you conclude that the market is rallying, you then need to pick stocks, or I do anyway. And my two primary tools are seasonality and relative strength. Now, dynamic cycles are not included in this study. What you're looking at is number one ranked for December is DLTR Dollar Tree. Now, Dollar Tree, I've been recommending it in Forbes since the beginning of the year, and it's done pretty well. Its seasonal rank is fourth. In other words, if we check the percentage change in all stocks in the NASDAQ for December, they come in number 4. Costco is number 1. You can see that go down 4 rows. It is RSV is a relative strength. It's a special way of calculating it. It's number 8. Combine the two of them, divide by 2, you get a 6. So it's got the best overall ranking. Now, O'Reilly Automotives, which is ORLI, is ranked number 2 in relative rank. Gilead Sciences number 1. So Dollar Tree I've recommended. Picard I don't like to get involved with. ISRG is Intuitive Surgical. And here we see the ISRG 3-up chart, which is price on top, momentum is the blue line, and relative strength. And this is daily, weekly, monthly, a technique I picked up from Ian Notley. You can see the higher lows in momentum, and you can see a breakthrough. Well, once it's broken through, it's probably going to go from the formation it broke out of. It's probably going to go the height of that formation, which I estimate is about 75 points, 50 to so that's a 300 to 325 objective. I don't know if it's going to get there, but right now it just broke out. So your downside is very tiny. In other words, you've got an excellent reward-risk ratio, and the relative strength. The green line just hit a new high. Weekly, wow. The downtrend is broken, higher lows in momentum, relative downtrend is broken. And here you have, or you can say, a lot of stocks, it's look how oversold it is. Go back to 2006. It's not that oversold yet. The relative strength has popped up. Here's the seasonality. Now, this is the expected return. It is the probability it's going to go up multiplied by the percentage. And here you see November is the strongest month to hold this one stock. December, September, so it looks okay through Q4. So that came from the screen. And by the way, the reason everybody runs screens is, when I did fundamental analysis, you get screens of price to book value, sales to PE ratios, sales growth, but not this type of screen. I had to invent this. And I've got a lot of stuff that projects out into the future, which I'm not into right now. ON Semiconductor, which I've owned a lot during the year. Again, it's daily, weekly, monthly. Black is price, blue is relative strength, momentum, and green is relative strength. We'll go to the weekly. Higher lows, a new high in momentum, a new high in relative strength, I should say. This stock has been strong all along. I mean, look at that. And all that turmoil, it's been one of the strongest technology stocks during a bad period, which means it went down less than anything else. I think it's ready to break out now. This is the probability of a rise. So in other words, this stock over the last 23 years has risen 75% of the time. Now, as Frankie Joe used to say, if you're right 60% of the time, you can make a fortune. Well, here it's 75. And if you factor in the technicals I just showed you, Larry, then it's probably closer to 80. Now, those are pretty good odds. And this is so. ON Semiconductor. This is 82% of the time. It rallies from October up through the end of the year. That's
a seasonal 82% of the time, October. Wow, that's really hard to fade that.
Okay, well, bonds, I'm just going to do this very quickly. This is the histogram for bonds showing the percent that's going to be up in red. The blue is the percentage gain or loss, and the green is the expected return. I have been short bonds. I own the TBT. I might take some profits today because I think notes, 10-year notes are giving, and 30-year bonds are giving buy signals, and might rally up, and I'm just protecting a profit. But I'm not, long-term, I'm bearish on bonds. And bonds, look at this, 38.2% retracement level of the entire move from 1982. You don't think it's going to stop there for a minute? At least bounce up?
No,
that's what I'm looking at, but I still think
it's the most oversold market I've seen in a long time.
And here you are, from 1980 is the 50% retracement. So you're at two major retracement levels of two major moves up. Now gold, the top, the 11th Friday was a projected turning point. In other words, day counts from previous weeks and months and lows and highs. And so I'm expecting a pullback to 1685 by the end of the month. Oil, as you can see, is in its very weak period. You know, I have a target on it in the low 80s right now. Now,
that's not far away from there now.
I gave you a contrary opinion sell signal. That's October 10th cover of Barron's. There you go. There was the Barron's signal, and look at the performance in the dollar.
Yep.
That's the value of contrary opinion.
Yep.
And here's the U.S. dollar. Look at the month of December. It's the weakest. So how can it recover now? It is swimming upstream. It's running up the down escalator, and you're eating soup with a fork if you're going long the dollar right now.
I like that
The
one.
odds are against you. Now, that is the longer-term picture. I've shown this before. That's a major breakout, so I don't think the dollar rally is over.
Mm-hmm.
And the real estate cycle, well, we did this last time, but I just want to emphasize it's already breaking down. You can see that in the news. But 2023 to 2027 is very weak. That's a bear market for real estate. And, you know, you can't sell real estate easily like we can sell stocks and bonds. So, important developments. Now, I told you this last time, but I just wanted to repeat it, because I want to say something about cryptocurrencies. Here comes the U.S. government. I think I told you that Matthew Mellon, the backer of Bitcoin here in New York, he told me the government's coming in and creating a cryptocurrency of their own. And I said, well, when that happens, they're going to offer incentives for you to use their crypto, and they'll introduce rules and regulations that a lot of the lesser cryptos will not be able to meet. And they will go under, like a hippopotamus jumping into a pool. All the little boats will sink. Only the big ones will stay afloat. And my client came back from the Bahamas, and he said you can trade in U.S. dollars, Bahamian dollars, or a local digital currency, and they give you a discount if you use it. So it's already happening on a minor scale. And I mentioned before, effect of the Russian war, housing prices in Dubai up 89% year over year. There's a programmer shortage. I talked to a company in Serbia. They said, sorry, but we're paying exceptional salaries because most of the good guys were in Ukraine and Russia. And the translation of the Putin speech, he's preaching family values, and they don't want, all the philosophical rot that's going into other countries coming down there. That was directly translated by some Russians. Now, the next two slides are the most important. This is Bill's highest recommendations. So my first highest recommendation is Duane Park is the only New York City French burlesque supper club. I was there twice. And
a burlesque show?
You have to.
With a supper club?
It's a very high-class place. If you walk past it, you would never even know it's there. It's the best kept secret in New York. It's small, intimate club, very professional, great show. They've had I took my doctor there. He thought it was some sleazy place because it's on the corner of Bleecker and Bowery. And no, it's very high class and great entertainment. And we got to sell some stuff.
We're going to sell some stuff and stay right. We'd like to hear some more about this and also your second recommendation. We'll be right back with Bill Meridian, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, speaking with Bill Meridian, Cycles Research. Do you want to continue, my friend?
Yeah, and by the way, you can confirm my recommendation of Duane Park because I took Stan Harley there. So next time Stan is on, ask him.
Okay, I will. How much? What was the tab? About $200 a head?
How'd you guess?
Yeah, I know New York. You know, it's 10 times what it is in two.
Thursday, Friday, Saturday, and Sunday nights, they have, it's a set price, $175. That excludes alcohol. And they have a Sunday brunch now that's $85. I had never been to the brunch. And they used to have opera burlesque night where they, third Tuesday of every month, they sang opera while stripping. And we went there not knowing what to expect. I didn't know it existed. Unfortunately, the opera singers are not available right now, but they do have sometimes male strippers, jugglers. They had a card trick guy come to the table and before the show started, but it's very good food, very high quality, exceptionally well run. Everybody I take there loves it. And my second recommendation, this is me Saturday night and in the back, that is a tap dancer and singer. That is Fasano's. Fasano is an Italian family from Brazil that has taken over the old Four Seasons where we used to hang out. And they only opened a few months ago. There's a restaurant downstairs and this jazz club upstairs. And it was terrific. It's AC Dixon or AC, I forget his name. But the guy's terrific. And now we're going to go back to cryptocurrencies here. I sat, you don't see him because he was sitting next to the guy who snapped the picture, somebody who's starting a Bitcoin network. And I said, how's it going? And he sort of like, a little slower than I thought. And I was telling these guys, I said, you've got, all these guys like 20 years old, they got $80 million. I said, I think this may not be the time to go into that. So.
Hey, Bill, thanks for joining us, my friend. God bless. Yeah. We'll see you tomorrow, folks. Bye-bye.